Hello? Yeah, I'm just about to do a stream in a moment. Yeah, and then I'll be back on. Okay, yeah. Okay, bye. Right, here we go. Okay, good morning, folks. Morning from lovely spring morning here in London. Market's just opening here in the UK. Quick sound check. Oh, I've showed my bald head there on the screen. Right, quick sound check. 1, 2, 3. Good morning, morning all. Drum drum from Jenny. Big Riverman, laugh out loud. Morning, morning Sandgate. Okay. Well, hopefully we all had a good day yesterday. For those that missed my London rap stream last night, I'll just recap basically what I said. It was possibly one of my best ever days, certainly my best day trading for about 15 months, purely on the back of pure, I wouldn't say pure luck. Remember from the stream yesterday I talked about the pound possibly hitting a resistance level to the upside, and that we were coming into resistance on all major pairs. So I had to take my car in for a service, and I took in 2 short trades in the pound against the Aussie and the pound against the yen, with about 25 pip take profit target on both, and I went out for an hour and a half, and when I came back, I didn't have the radio on in the car. Came back and I'd seen what had happened with the announcement from the thing. Because of that, I was able to take 5-to-1 profit on both of those trades, and a reasonably sized trade. So that was a great trade. And then I actually picked a, when I realised that the rumours were going to be about the snap election, I thought, oh, this is just not bad news for the British pound. So I took a long pound yen, which I'm still holding. So it was a reasonably good day for me on that. Let me just explain to you, for those that are not really following British politics and what's going on here, let me just explain before I get into the charts. I want to look at some pound charts in particular. But before I get into that, I just want to explain the reasons why the pound is so strong at the moment. As you know, it's all to do with Brexit, or you should know it's all to do with basically the Brexit, which is the British UK pulling out of Europe. Now, when that was announced last 23rd of June, pound went into shock and devalued against the major currencies. There's a fraction of the ruling Conservative Party that basically want a very hard Brexit, which will be possibly negative for jobs, which is negative for inflation, and these people are almost wagging the tail of the Conservative government. So the Conservative government is basically, pushed almost into a corner with this faction of the Tory party wanting a very hard Brexit. She only has the majority in government of about 12 seats. Now, the main opposition in the UK government is the left party, the Labour Party, and they are in complete disarray at the moment. They have a leader that basically is not supported by their party. He was struggling to form a shadow cabinet recently, and there's the lowest ratings since basically 1983, when Margaret Thatcher got a landslide victory, where she won about 170 or 80 seats or something like that. So he's in a worse situation than in the 1983 polls, when, as I say, they got that snap election. So now she's thinking, if she calls an election now, she's going to increase her majority. The far right wing of her party that's going to maybe stop her from having a softer tone Brexit will be less powerful. Now, if she does increase her majority, she's able then now to have a bit more control over the negotiations in terms of Brexit, which could lead to a softer Brexit, which would be better for the UK economy in terms of what the market believes, in terms of jobs, and so forth in the short term. What's going to happen in 5 years, 10 years time? I actually personally think we'll be a lot better off. But this is why the market's so much buoyant now behind the British pound, because they're thinking that a softer Brexit, which will happen with a bigger majority Conservative government, will lead to a stronger pound. So the pound has hit a huge buying interest. Now, as far as I'm concerned, we've had a really good rally in the British pound. We've had 500 points against the Australian dollar, big moves against the US dollar, and what have you. How far it can go from here, we'll get onto that in a moment. Let's just first of all talk about the markets the way I see them at the moment. We've got the dollar index, putting up the dollar index now at coming in at 99.50, so bang in the middle of par to 101, and the where we are in 99.50. Now, we spoke about yesterday about this being the sort of key resistance level to the upside. Didn't actually get up there. We let's have a look. Pull up to the 1 day. Didn't actually get in here. We tested it or made a move up there, but then fell back straight off and back down at these levels. Now, I see the dollar under continued pressure. Now, the dollar's under continued pressure for a number of reasons, not least of all the Trump administration struggling to get through. Well, they've had obviously weaker than expected economic data recently, but also Trump's tax policy, his fiscal agenda is sort of like pushed further down the line. We've got geopolitical concerns. When geopolitical concerns happen, it's having a wobble in the stock market. The stock market's giving back most of its great gains from Monday. It's 400-500 points. It's considerably lower from its highs of 21,000. 20,400 or so. So it's having a wobble. The Trump rally that we've seen since the elections last year, seems to have been running out of steam. So stocks are wobbling. The bond markets and the safe haven currency, the yen, are all sort of are catching a bid. Bond markets are catching a bid, which means the yield prices are coming down. And of course that's affecting the US dollar as well at the moment. So the US dollar is under pressure the way I see it. I'm looking back again. I referred to this on a number of occasions. I'll refer to it again. This is the Trump candle that I'm looking at. So the Trump candle back down at 98.55, basically just initially after the election. We've touched it once. It's also at the it's not far off now the 200 moving average as well. So if dollar pushes lower to this back down to the Trump candle at 98.50, that basically is my bias, and that will have a positive effect on gold prices. And I've just put a trade idea out. If you look on the site here, you'll see my trade idea in gold. I've just gone long gold. We'll look at that in a moment. So that's my bias in the dollar at the moment. Playing dollar weakness to the downside. Against the stronger currencies. Let's just have a look before I motor on to the pound pairs. Let's just have a look at my gold trade idea from half an hour ago or so. Okay, so with that in mind, I've taken this was my buy zone, which we sort of missed yesterday by a few pips. Okay, I missed it yesterday by literally $1. Basically into my buy zone yesterday from yesterday's stream before we motored back on. We've had a retracement back now into this congestion area. This is about a 50% pullback from the lows of yesterday. So it's got some fib interest here. Okay, I beg your pardon. It's a 38% pullback into the from the fib. If you take it from take the fib down to the buy zone congestion area, it's a 50% pullback. And it's got the fundamental reasons that I've just cited why I think that the safe haven, geopolitical concerns, dollar weakness, it's going to see the gold prices push on to test 1300 level. And my target for gold is back up here at I think if we pass through 1300, the next target on the upside is at 1310 before we hit to 1325 area. So 1310 is my first take profit target on here. I've got a reasonable stop in it. It's not a massive risk reward, but it's more than 1-to-1. I've got a like a $16 stop with a $25 TP take profit. So it's a reasonable risk reward, but it's not the best. But that's basically Potter's talking whatever Potter's saying. So that's basically my play in the gold. Now I'm also possibly looking to not on it at the moment, but looking possibly to play the the dollar weakness against a stronger currency. So looking potentially at the dollar yen. Sorry, I'm hopping between my profiles here, but let's just have a look at the dollar yen. Okay, the dollar yen, we are now at 108.85. I've got my initial sell, conservative sell entry, which we didn't touch at 109.29, 109.30. Okay, so if we get back up here, still 60 pips away. That's quite a conservative entry for me, really. We've blipped through my sell zone here at the moment. I don't. Let's have a look at the strength meters, find out what's happening to the yen. Just looking at the 1 hour on the yen. The yen's not really doing very much. Just a little dip lower. Pounds going. I'm quite happy to take a small short in the dollar yen at the moment on this pullback. It's a reasonable pullback from the lows of yesterday. You know, we've made back half the ground from the moves from the high yesterday to the low yesterday. It's a 50% pullback, as you can see. It's into a layer here of consolidation or old support. So I'm quite happy to take I'm going to take my stop is going to be 50 pip stop. Just bear with me a moment. Okay. So I'm just taking a short, small trade there with a 50 pip stop there. 50 pip stop above my other sell zone, so it's about a 57 pip stop. So I'm just going to place that in there at the moment. I'm quite happy with shorting dollar yen in this pullback for continuation of dollar weakness and yen strength later on. So I'm quite happy with that trade. Right. Okay. Let's just have a quick look at the pound. Okay. The trade that I had yesterday. I had pound Aussie and pound yen short, which made me my money when I was way out off the desk. As I say, normally, if I'd have been at the desk, I had a 20-30 pip stop. I can't remember now. It's about 30 pip stop, I think. If I'd have been at my desk, I'd have mostly been happy with a 60 pip or 50 pip take profit target, because I was away from the desk. I was happy to get much more than that. So it's a case of letting your profits run, not conscientiously doing so, which made me the money yesterday, which is a great trade. Bear with me a second, please. I just have to stop the stream for 2 seconds. Excuse me. Right, sorry about that. I was getting critically low on storage space on the on my hard drive, and when it gets to that level, everything just blacks out and all my screens go, and I lose all my MT4 setups. I had to cancel some stuff there. Right, I'm back. Okay, sorry about that. So dollar yen, pound yen was my trade yesterday. Pound yen. Okay, here I am in pound yen. Okay, motoring on now, 139.75. My take profit target in here is back up at the 140.40 level. Okay, just we've tested this is the daily chart. So 1, 2, 3, 4 tests here to the upside. You could test it again. We we're shy of it here on the end of March. It's my take profit target. I'm long from down here. I'm long from 136.25, so it's a reasonably move for me. I have moved my stops now to lock in some gains. I'm quite happy to move my stop up a little bit now, but I mean, I'll lock in another. So 139.75. So I've just moved it now to 75 pips away. So I'm basically halfway between now my getting stops out or my eventual profit target. So you remember me, I'm not a big mover of stops too quickly, but when I've got big trades on like this in terms of distance, I'm quite happy to move my stop to lock in profits as it go. But at some point, I'm not going to trail this forever. At some point, I am going to take a profit and then reassess the situation. My issue with the pound at the moment is that we've had a big rally. I mean, so while I go on this, before I go on to the to the Aussie pound, this is the level where you could see it back down. So I'm going to take profits from here and get out, as I said. So just going over that. If you look at what's happened in the pound Aussie, this is the pound Aussie, guys. I mean, Aussie obviously it's a weak currency across the board for various reasons. We've had yesterday. This is a 5. This is almost okay. Yesterday we hit the peak. We had a spike through while I was on last night's stream in pound, and we even thought that was just a spike, but it's back up there again at the moment. I mean, pound Aussie, we had a 600 pip move, 600 pip move in the pound Aussie in a day. I mean, that is huge. I can't remember the last time we had something like that. That type of move. In a very, very long time. But as we speak at the moment, the pound or the Aussie there's a big movements going on as we speak at the moment. Just having a quick look. So I'm just pulling out the meter again to find out what's going on there. It's the pound going again. Aussie's not doing much. It's the pound that's moving. The pound's moving, so it looks as though my pound yen is hopefully going to take me out there soon. But the pound Aussie is coming into. If I pull out to the weekly here, you've got to pull out to the weekly to see that this is resistance level at the moment. So it could be a stalling level. Now from yesterday's stream, it's the same story. We're at these levels now in pound against major pairs that is coming into some structure. We're going back now to the 23rd of June levels where we had the Brexit announcement that we're approaching these levels. This is now back to the 23rd of June last year, which is back back around here. This is the 23rd of June. This is the Brexit level. This is what happened after the Brexit. We're around these levels now. This is coming into resistance. Now, the election that we spoke about at the beginning of the stream, is positive for the pound. However, it is not without risk. This is not plain sailing for the pound. Over the next 6 weeks, we are going to be having, polls coming out. We're going to have, the parties fighting it to the other in their electioneering. It is not without risk. And until and we've still got Brexit coming. We still haven't started the Brexit negotiations at the moment. So any pound strength at the moment I'm seeing, I'm definitely going to be cautious of. Pound Aussie with a 600 point move to the upside. I can't see myself buying this at the moment on a risk reward basis. On a risk reward, okay, I'm not so keen on the Aussie, to be honest, because I think the Aussie's got its own problems. But on the risk reward basis, I can't buy pound Aussie. It's just not a pair that I would feel comfortable about trading. Something that I would be more comfortable about trading would possibly be the euro pound. Okay, the euro pound now we're coming into 83.54. Okay, looking back here, I don't know if you can see this chart. Is it a bit small? Okay, so we're coming into this support again. Pierced it yesterday. Okay, back from beginning of December, touched it again here. This is like the base of it before the onslaught to the upside, up to the 92 area. And this is the election candle. No, this is the Brexit candle. This is this is where we were prior to the referendum announcement. We were back down at 77. Okay, and then the referendum announcement came up, and we shot up. 600 pips, 76 to 83. Okay, so that was a massive move. I mean, that is a 600 pip move, and obviously it's only against a handle of 83 against the pound Aussie. But that was a massive move. But we're not. If we break this 83 level in euro pound, which was basically the height of the candle after the referendum, then we could be looking back down at these levels. We could be back down looking at the 79 level. I mean, it's the risk is to the downside. Remember, the euro is benefiting because of yesterday's announcement in the British, because a good Brexit is good for everyone. A good divorce is good for both sides, as some of you may know if you've been divorced. It's much cleaner to have an amicable settlement. So it's good for the euro as well. But in terms of the two currencies now, at this moment in time, the possibility of risks weighing on in the euro in terms of the French elections, and and the gap is narrowing there. I mean, it's still unlikely, but the gap is narrowing there. The risks are I think heavier on the euro than they are on the British pound. So if you're looking to trade the pound strength, trade something that it's more sort of, I think more likely to benefit from in terms of other weakness. And I think euro is possibly the potential pair that I'll be looking to get in at. So 83.10 is a key level in the euro pound. If you break down through that level, then you've got to be looking to target the low the low 80s, 80, even 79. Remember, before Brexit we were back down here, and Brexit affects both sides. So there's ways to the downside. So on a risk reward, long-term trade now. This is not sort of 15, 20 pip trade. This is not an intraday scalp trade. This is a longer-term trade. Risk reward. The pressure certainly for me would be on the downside in the euro against the pound. Potter, in England it's only 20 past 8 in the morning. You can't be drinking at this time in the morning, surely. Anyway, so that's the euro pound. Right, let's just have a look at the strength meter. Okay, so we're seeing continued weakness in the Australian currency. This is the weekly iron ore price, down 3.7%. This is the 3-month iron ore price, down 9.5%. Okay, copper stabilizing today, but still again it's showing weakness. Australia's biggest export, iron ore. Chinese currency is slowing. No real signs of that pushing out at the moment of into any notable growth. Okay. Australia remain under pressure. Now it's had a big rally. It's had a big fall to the downside over the last 2 or 3 weeks as we've been talking about it. How much further it can go, I don't know. I mean, I'm always concerned when you have such a big move in that currency. But at the moment, you've still got to consider that it is a weak currency, and if you're looking to trend continuation, you've got to consider playing that to the downside. If you look, just going out to the 4-hour on here, you've got the euro and the British pound are the strong currencies. The Japanese yen has been the safe haven play. Let's have a look at euro Oz. Haven't looked at it this morning. Sorry, Aussie yen. So let's have a look at Aussie yen. Okay, we're in the consolidation. This is the 15-minute. This is the sell zone that I had penciled in from yesterday. We're drawn in from yesterday morning stream. or the day before. We did trade up through it by a few pips only, so it would have been a nice trade. I didn't get a notification, and we're back down here at the moment. Now, looking left on the chart for a 15-minute entry, Aussie yen entry coming in around the 81. This is the 15-minute chart, 81.85. If you're looking for an intraday trade, more conservative entry, back up at the 82 handle. We blip through 82 to 82.10. This is a trade that you can certainly take to the downside. And again, the stops here are quite obvious where you're going to put your stops here. You've got a 50 pip stop above this area where we tried to retest the continuation of the uptrend. It failed miserably to roll back over. If we retest that level 50 pips higher, and all bets are off against the Aussie yen, then it's time to reverse out of that. So in terms of risk, easy place to place your stops there. Continuation to the downside. You've got down to 80-20 area before you look, well, possibly possibly 81.25, then back down to the 80 area. So risk reward, Aussie yen to the downside is something you might look at. Bearing in mind we're still seeing Aussie weakness, and yen is given back some ground, obviously, and that's why we've got the opportunity to maybe to short it again, to buy it again, the yen, but short the Aussie against it. So that's a pair that I would possibly look at taking. Okay, I think I've covered enough there for a 25-minute, 30-minute stream. Let's just quickly look at the bond yields. Bond yields that I was talking about earlier. This is the 10-year bond yield. Broken through the crucial 220 area, which is why I am still remaining negative, bearish on the US dollar. Okay, this was a reasonable key level, the 220 area. We've broken through there now. In fact, closed yesterday at 218. And if we put it out to the 1 month, so at 1 month lows, 3 month, 6 month. So we've not been back here since basically just after the election. So we're at basically the election levels. And then we announced we're going to have, the FOMC announced that we're having 3 rate hikes, and Trump started talking about his fiscal plans and its spending and its tax cuts and its regulation pullback, and up went down came bonds and up went yields, up to 260. And basically not a lot's materialised, and we've grinded back low. So now we're having 3 hikes this year, and bond markets yields are back to basically where they were just after the election. So this is one of the reasons why I do have concerns about the US dollar at the moment. So I just want to highlight that to you. It's something that I think you should look at. Certainly if you're trading foreign exchange, you should be looking at bond markets. Bond markets tend to recede the FX markets. Alright, let's have a look at some trade ideas. Trade ideas. Okay. Right, this is from 1 hour ago. We are pound Aussie short. Yep, I mean pound Aussie short. I mean, I looked at this. I mean, we spoke about this. Pound Aussie is at a 500 pip range. I mean, we're coming into this level of consolidation. I don't quite see the setup, but I mean certainly a level of resistance. I mean it's counter trend. You might have risk reward in your favour after a 500-600 point move. Risk reward's got to be in your favour, I guess. However, I don't like standing in front of freight trains. You've got a negative currency against a strong currency. So it could work for you. Certainly in terms of a 500 point move, might be okay. We've spoken about my trade idea, which was the buying gold. I'll put my dollar yen up there later. This is Aussie yen. What are we doing in Aussie yen? We're shorting Aussie yen. Yep. Yeah, like the short Aussie yen trade. Trend continuation to the downside. Yeah, on the same page as me on that one. I think we just spoke about that one as well. So thanks for that. No take profit target, but you've got a 120 pip stop, 130 pip stop. What we got here? We've got Kitchi. What are you up to, Kitchi, today? Nicely displayed trade idea as usual. Beginning of a bearish triangle set up on the 4 hour. Let's see how it plans out in shorting dollar yen. Well, you know my idea about that because I've just done so myself. So I agree with that trade. Okay, yep, good bump. And Kitchi, you're also long euro dollar. I like that one as well as it goes. So Kitchi, I think we're on the same page. Just another screenshot of my bias euro dollar. The 4 hour chart was, which I'm thinking is head and shoulders. Head and shoulders, yeah, got a head and shoulders there. Head and shoulders would indicate a trade lower. If we break the neckline, which is possibly down here. But the bias in terms of strength over weakness, certainly on the trend on the strength meter, that works. Euro strong at the moment, being dragged up with the pound, and dollar weakness as we've spoke about. Okay. The pound dollar I was talking about, pound dollar 86 was basically, we're at 129 to 130 level. It's certainly something, for us to break through the 130 level. I think, you need to be a cautious buyer because, we've had a good rally in pound dollar. There's going to be certainly some risks along the way. It's good for pound. I've spoken about pound strength. You can play it back actually if you want to play the video, the stream back. But I think 129 to 130 level, really in pound dollar could be about the sum of it. Excuse me, before we get any further, catalyst or any real positive news. Because at the end of the day, this is great that we've got a good grounding for Brexit, Brexit negotiations, grounding for the election and Brexit negotiations. But the negotiations haven't yet started. Let's be honest, the negotiations haven't started yet. So there's going to be nervousness in buying pound at the moment, I think. But certainly the bias at the moment is still to go long pound because that's what the markets are doing. And I think there are still some shorts out there expecting Forex markets to be easy and pound to hit 105 level. There's certainly some banks out there position themselves to the 10 level, 105 level down there. So at some point they're going to break as well. Euro New Zealand. Let's have a look at Euro New Zealand. Euro New Zealand. One moment. Where is Euro New Zealand? Okay, so the Euro New Zealand, I haven't looked at this chart before, so I don't really know what I'm looking at in terms of direction. I mean, it's been flatlining on the 4 hour, 150 to about 200 pip range. Let's have a look at the strength meter first of all. Euro stronger, New Zealand weaker, but sort of basically moving with each other on the 4 hour. Just pointing out to the daily. Yeah, it's reflected in the charts, in the price action. Euro New Zealand. Euro is being dragged up by the announcements yesterday. It has been grinding higher. Anyway, you have to play it to the long side. But this, looking back here, possible area of resistance, but I'll play it to the downside. If you're not long of it, you know, I'm not trading this, but if you were looking to get long, you know, 52, 50 area, if it pulled back into there, you could trade continuation with a stop of 45 pips, 2-1 to retest the highs of last week, you know. Intraday entry at 152.43. Bias to the upside. Target 153.50 to the upside. But I have no real conviction behind this. I haven't really been following it. I don't really know the intricacies of this pair. Right, okay guys, I'll leave it there. Anything else in the chat? Okay, good stuff. All right, then thanks for that. Keep an eye on the pound today. We've got some big moves behind us. See if that continues. Let's just have a quick recap. So unchanged on my dollar yen, unchanged on gold, I'd have thought as well now, unchanged on gold, and basically exactly where my buy entry was. They're my two trades that I've done today. My pound yen unchanged, just bang smack in the middle of my take profit on a pullback or take profit for a target, so I'm happy with that. Thanks for joining, chaps. I'll be in the room all day long today, chatting and responding, looking at trade ideas and so forth. I'll always be on for the afternoon wrap this evening, 6 PM London time. I might pop in the meantime if anything pertinent happens. Parliament's meeting today. Prime Minister May might take questions in Parliament as well. So we'll see if that springs up anything. Tony is on in an hour and 20 minutes. So it'd be good to see his take on that, especially look out for his pound dollar trade that he had yesterday. He came on stream, for those of you that were around in the London around 11 o'clock when Prime Minister was announcing. He took a pound long trade He also posted it in the trade idea as well, which has worked out fabulously well. And if you looked at what happened in pound dollar overnight, you know, while we were on the afternoon stream yesterday, this is the let's pull it out. While we were on the afternoon stream yesterday, you had this spike going through. I was talking about I don't think we're going to get up to 129, you know, in the next couple of days because of there's still risks involved. And just as I was talking, we jumped 140 pips as I was talking. So it shows you that I'm not always right. So we spiked through, hit 129.04, took a few stops out, of course, around here. That's basically what that was. And then came straight back down for another 60 pips. So this was all in a matter of a couple of minutes. So it was interesting. And so any of you that were following the trade idea would have done very well. So Tony did well. Anyway, Tony's on in an hour and 20 minutes, so I'm sure you'll hear all about it there as well. Jason's on in a few hours for the US opening session. So it's another fun-packed day of live streams here in forexsignals.com. So enjoy, interact, and we'll speak to you soon. Thank you.